How's it going, YouTube? Certainly good to see you all again. My name is Ari. For those of you stopping by for your very first Blue Lion Finance episode, this is a channel solely dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now, the stock market is closed today. It is a holiday, so we have a shortened week ahead of us. However, as forward thinkers, which all investors very much should be, we need to start taking a look at what exactly we should be investing in. Fourth quarter earnings season has been underway. We are getting a mixed bag of results, which is honestly now just creating volatility. But as a long-term value investor, it's now most important to take a look on what stocks are on sale, what we can scoop up for a discount, which is exactly what today's video is all about. I want to go over 5 high-quality dividend stocks that are currently trading for discounted prices. And in terms of my personal account, it is actually down by $315.89. However, my account is still up at a high here at $87,250.98. And with that, before we dive in, tap on that thumbs up button and help me grow this channel. And of course, if you haven't done so already, tap on that subscribe button as well. I'd certainly love to have each and every one of you along for this ride with me. Now, YouTube, let's go ahead and dive right in. So who is ready to get started here and talking about these 5 high quality dividend stocks that are currently on sale? Now, I've said this and I'm going to say it here in this video loud and clear so all of you can take note. This year, 2022, is going to be the year for the value investor. I really do foresee fundamentals becoming more imperative as the stimulus checks go away. We're not getting that government support. And now here we are needing to be very selective with what we're investing in for our longer term financial futures. That's where value plays come in. So this video is perfect for the long-term value investor looking to collect on those dividends, leading me all to the very first dividend stock opportunity coming from Waste Management, ticker symbol WM. Now, Waste Management is North America's largest waste collections, transportation, and disposal company. It was founded back in 1968 and since then has just done an outstanding job in growing a very strong customer base, whether they be in the private sector or public sector. And let's just be crystal clear here. I mean, none of us are going to stop throwing trash out anytime soon, so we are certainly keeping Waste Management in business. Now, in taking a look at Waste Management's stock share price activity, it actually took a bit of a hit, falling from $167 per share down to around $156 per share. That's about a 6% opportunity for all of us to capitalize on. And what makes me excited is just looking at Waste Management's growth over time. Zooming out about 5 more years, we can see that they were trading for around $70 per share, popping up to around $118 just before the pandemic. But yet here we are sitting at $156 per share, and analysts are only actually projecting continued growth, which is what I love to see. They're coming in at a median stock share price of $166.50 and a high stock share price of $188. Now, as a long-term dividend investor who really just wants to kick back, relax, and collect on reliable dividends, Waste Management is going to deliver through because their dividend yield is currently sitting at 1.44%. And as mentioned, as long as you continue to throw that trash out, Waste Management is not going to be disappearing anytime soon. Moving to our second stock opportunity, we have America's largest bank. That bank is JPMorgan Chase, ticker symbol JPM. Now, JPMorgan recently fell from around $169 to around $157 per share. That is nearly a 7% discount for all of us value investors to pick up JPMorgan while it is discounted. And just taking a look at why exactly its activity has fallen is because we recently had Jeremy Barnum, CFO of JPMorgan Chase, come out and share with us all that he is expecting higher and higher expenses as we go into 2022, and of course wage inflation, which is ultimately going to lead to JPMorgan missing on their capital expectations. That's going to scare away investors, and of course not pretty numbers for analysts to digest. However, let's just keep it real here in understanding that JPMorgan is America's largest bank. We're talking about a bank with $3.19 trillion in assets and a $466 billion market capitalization. Yeah, this bank is just too big to fail. Now, analysts also have high expectations for JPMorgan looking into their future, coming in at a median stock share price of $181.50 and a high stock share price of $210 per share. So room for growth for JPMorgan. And of course, as a dividend investor, we're collecting on JPMorgan's dividends along the way. They're coming in at a dividend yield of 2.37%. While not exactly a dividend aristocrat or a king, a company that I can rely upon for dividends, as they've been paying those dividends out since 1990. Coming Coming up on our third stock opportunity, this one's not particularly a dividend investment per se, although it does just so happen to pay out dividends. I've mentioned this stock maybe once or twice before on the Blue Lion Finance channel, but hardly ever do because it's really its competitor that is actually my never sell stock. Nonetheless, I'm giving credit to where credit is due with a high valued company. This company is Microsoft, ticker symbol MSFT. Now, Microsoft, of course, doesn't really need any big introduction whatsoever. It's a tech and software company. You all know that. Most importantly is just taking a look at this stock share price in the last 5 years. I mean, it's had exponential growth, growing in 2021 alone by about 55%. It is not done growing. It is leading us well into the future when it comes to technology and software. More recently, their stock share price fell by about 9%, coming down from around $342 per share down to around $310 per share. Not just because of the massive tech sell-off we recently had, but because of a lot of investors just trying to evaluate the company and understand what exactly a proper valuation is for Microsoft. And most importantly, they're watching this cloud adoption that Microsoft is taking on. And let's just leave it to Microsoft to figure that out, as they always do when it comes to software, technology, cloud-based computing. It's all their game. I have no doubt they're going to figure it out, nor do analysts, as they're coming in at a median stock share price of $370 per share and a high stock share price up at $440 per share. Now, as mentioned, not the biggest dividend player in the game, but nonetheless a nice little dividend at 0.81%. And I'm really going to be able to capitalize on Microsoft making that comeback. So it's certainly made the list today because it's a value investment that you can just hold on to for the long run. And now brace yourselves because we have a double-digit discount here. This one is coming in from Home Depot, ticker symbol HD. Home Depot is founded back in 1978. And of course, as I'm sure many of you are well aware, Home Depot has just established itself since its founding as America's largest retailer when it comes to home improvement projects. And that is exactly what we've seen over the last couple of years here. With everybody taking on DIY projects, Home Depot has just been surging, and now more recently, Home Depot has actually taken a bit of a hit. We can see here at their stock share price activity that it has fallen from $415 per share down to around $372 per share. That is a 10% discount opportunity for all of us to pick up Home Depot while it is currently discounted. And now just the state of the market type of talk here. We have to understand that we're in this reopening phase, or fingers crossed here, the reopening phase. So not a whole lot of DIY projects are continuing on, but wait, hold the phone. Maybe they are, because we have no idea what variant is coming out next on top of supply chain disruption issues. I think investors are just trying to evaluate really where Home Depot stands. However, analysts looking into the future are only foreseeing growth. They're coming in at a median stock share price of $427.50 and a high stock share price at $470 per share. Now, as the dividend investor getting invested into Home Depot, it's not your dividend aristocrat or king. However, since 1987, they've been paying out reliable dividends with the current dividend yield sitting at 1.69%. So there you have it, Home Depot. Definitely a solid pickup this week. And now last but certainly not least, we have the sweetest deal of the week. This company is Starbucks, ticker symbol SBUX. Now, Starbucks was founded back in 1971 and has just grown tremendously on a global scale. Taking a look at their amount of locations that they've been able to establish, over 33,000 locations in 80 countries. That is just impeccable growth for a company that is just a coffee house chain that's honestly not even real coffee, at least in my opinion.
Squeeze me? Oh no, you did.
That's right, I said it. Starbucks is not real coffee, and it's way too sweet. If you've traveled the world enough, you'll have learned really what real coffee is. But I digress because I don't want to offend any of you. And of course, the more mocha choca grande lattes you all are ordering, the more money is flown into my pocket. So definitely keep that up. But it's most important now to just understand Starbucks stock share price activity. They fell from around $117 down to around $100 per share. Ultimately, this is just a great opportunity for us to pick up Starbucks while it is on sale. Now, Starbucks is battling unionization on top of wage inflation and data pouring out of China that is pointing to their menu needing adjustments. We're getting a lot of customers going into Starbucks ordering that same old mocha choca latte, and they're not really ordering anything else. So Starbucks needing to work on that menu, not bringing in as much revenue. That's certainly impacting their stock share price. However, I'm confident that they can make those adjustments and and analysts are too, as they're coming in at a median stock share price for Starbucks at $125 per share, a high stock share price at $142 per share. And as the dividend investor collecting on Starbucks' dividend, their current dividend yield is sitting at 1.91%. And as far as I can see it, as long as you guys keep piling up in line to buy their coffees, we all just get to collect on that dividend. So an incredibly safe dividend investment. Now YouTube, that's a wrap. Those are the 5 high quality dividend stocks that I have for you this week that I see as heavily discounted opportunities for us to pick up as long-term value investors. I'd love to collect your thoughts by you commenting below. Let me know what you think on any or all 5 of these stocks, if you have them in your portfolio, if you're planning on investing. But do keep in mind, I am not a financial advisor, so just make sure you do your own due diligence prior to making any investments in any of these companies. And of course, before we actually get going, tap on that thumbs up button and help me grow this channel. And if you haven't done so already, tap on that subscribe button while you're at it. I'd certainly want you on this ride with me. And until the next video, YouTube, I will see you all there.